Okay, so let us continue with our multiple choice on inventories. Again, this is taken from volume 2 of chapter 1, Intermediate Accounting, 2022 edition by yours truly and Robles. Okay, so MC26, what amount should Robinson Company report as inventory on this December 31, 2022 statement of financial position? Okay, so Robinson Company's inventory at December 31, 2022 was 1,500,000. So we start at that amount, 1,500,000. Based on physical count, so that's based on physical count of goods, price at cost, and before any necessary year-end adjustment relating to the following. Included in the physical count were good bills to a customer FOB shipping point on December 31, 2022. The goods had a cost of 30,000 and were picked up by the carrier on January 10, 2023. So even if they were billed on December 31, 2022, they were picked up by the carrier on January 10, 2023. So therefore, sales took place only on January 10, 2023. So it is correct to include them in the physical count. So no adjustment is necessary. Goods shipped FOB shipping point on December 28, 2022 from a vendor to Robinsons were received on January 4, 2023. The invoice cost was 50,000, but because they were shipped December 28, 2022, under FOB shipping point on this date, we acquire already the economic control over the goods, 50,000. So therefore, the correct cost of inventory is 1,550,000. May I emphasize that it is the economic control over the goods that determines whether the goods are included in our inventories. It just so happened that economic control in most cases coincide with the possession of legal title. But for some other circumstances wherein there is a conflict between possession of legal title and economic control, what will prevail is the economic control. Please take note that we are applying substance over form. NMC 27. What is the correct inventory on December 31, 2022? So the inventory on hand at December 31, 2022 for SM Corporation is valued at a cost of 3 million. So we start with 3 million. The following items were not included in the inventory. So if the item is properly not included, no adjustment is necessary. But if the item is inappropriately not included, that means we need to add. So goods purchased in transit, ship FOB destination with a price of 300,000, which includes freight charge of 30,000. So they were in transit as of the end of the year. They were purchased FOB destination, so there is no economic control yet as of year end. So it is correctly not included. No adjustment is necessary. We have goods sold in transit, FOB destination, with invoice price of 490,000, which includes freight charge of 40,000 to deliver the goods. So under FOB destination, that freight charge is actually freight out, which is a selling cost. So that is 490,000. So are we still the owner of the goods? The goods were sold FOB destination. They are in transit as of the year end. Therefore, it has not been sold. So we are to add back the inventories, but it has to be added back at cost. So that's 490,000 minus the freight charge of 40,000. divided by the company sells goods at 150% of cost. So divided by 150%. So 490 minus 40,000 divided by 1.5. Therefore, we are to add 300,000. Goods held on consignment by SM at a sales price of 100,000. So we are SM Corporation. These goods are held on consignment. Therefore, it's properly excluded because that is, we are the consignee. Then letter D, goods purchased in transit, FOB shipping point with invoice cost of 600,000. Freight costs amount to 60,000. So we have 600. These goods are in transit. These were purchased FOB shipping point. So we own the goods already. And it is our responsibility to pay for the freight. So that is 60,000. So this is 660,000. Goods out on consignment with sales price of 300,000. Shipping cost amounts to 30,000. So that's 300,000. That is at sales price. So you determine the cost. So divide this again by 150%. So 300,000 divided by 1.5. That's 200. But freight to consignee is an inventoriable cost because it increases the economic utility of the goods. So we are to add to 30. Okay, so we have 3 million plus 300 plus 660 plus 230. Therefore, it's 4,190,000. Okay, so MC 28. So concentrate on the question. The correct merchandise inventory at December 31, 2022 of Yellow Ribbon Company. The accounting staff of Yellow Ribbon Company submitted an inventory list at December 31, 2022, which showed a total of 5 million. So we start with 5 million. The following information that may or may not be relevant to the inventory value submitted are given below. Excluded from the inventory were merchandise costing 80,000 because they were transferred to the delivery department for packaging on December 28 to be shipped on January 2, 2023. So whether they are to be sold or sold, FOB shipping point or FOB destination, the fact that they are still in the delivery department for packaging means that these goods are still ours. Therefore, add 80,000 because they were inappropriately excluded. The next, the bill of lading. So the bill of lading is a document relating to imported goods. The bill of lading and its import documents on merchandise were delivered by the bank and the trust receipt accepted by the company on December 26, 2022. Taxes and duties have been paid on this shipment, so that means that we have accepted the goods. But the customs broker has not delivered the merchandise until January 7, 2023. Delivered cost of shipment totaled 800,000. The shipment was not included in the inventory in December 2022 because the custom has not released yet the goods. That means that we were not able to count, but these are ours already. So add 800,000. A review of the company's purchase order shows a commitment to buy 100,000 worth of merchandise. This was not included in the inventory because the goods were received on January 3, 2023. So purchase commitments are simply executory contract. So if this is non-cancelable, it only requires disclosure, but no inventory yet is to be recognized. So no effect. Supplier's invoice for 30,000 worth of merchandise dated December 28, 2022 was received through the mails on December 30, 2022, although the goods arrived only on January 4, 2023. Shipment term is FOB shipping point. This item was included on the December 31, 2022 inventory by the company because the shipment was made FOB shipping point, then this is ours and the item has been appropriately included, so no adjustment. Okay, no adjustment. Goods valued at 20,000 were received on December 28, 2022 for approval by Yellow Ribbon Company. The inventory team included this merchandise in the list but did not place any value in it. So even if it is listed, no item, no amount was included when they totaled the inventory. On January 4, 2023, the company informed the supplier by long-distance telephone of the acceptance of the goods, and the supplier's invoice was received January 7, 2023. So therefore, only on January 4 that we accepted the goods as part of our purchases. So it is appropriately not included. Although it was listed, no amount was included in the total. So in effect, it was not included in the inventory list. So no adjustment is necessary. Then for the last item, on December 27, 2022, an order for 25,000 worth of merchandise was placed. This was included in the year-end inventory, although it was received on January 5, 2023. Seller ship goods, FOB, destinations. So again, this was purchased FOB destination. The order was placed on December 27, 2022, but it was received on January 5, 2023. Therefore, economic control and legal title were obtained only on January 5, 2023. But this was inappropriately included. Therefore, we are to deduct 25,000. Therefore, our inventory, we have 5 million plus 80 minus 800. No, plus 800, sorry. Again, we have 5,880 minus 25. Therefore, it's 5,855,000. Okay, we now go to MC 29. The question is, inventory was determined by physical count on December 31 as 77,500. What is the correct inventory amount that should be shown in the October 31 statement of financial position? So therefore, we start with 77,500. The following purchase transactions occurred during the last few days of Wilsell company's business year, which ends on October 31 or in the first few days after that date. A periodic inventory system is used. An invoice for 6,000 terms FOB shipping point was received and entered November 1. Please take note that our year end is October 31. The invoice shows that the material was shipped October 29, but the receiving report indicates receipt of goods on November 3. Okay, so the receiving report is the basis for us to record purchases. It was shipped October 29. It was entered November 1. So therefore, the purchase was recorded November 1. Both the purchase and ending inventory were understated, but the question is ending inventory only. If you are to correct the purchases, then you are also to add 6,000 to recorded purchases for the year ended October 31. An invoice for 2,700 terms FOB destination was received and entered November 2. The receiving report indicates that the goods were received on October 29. So this is term of OB destination. It was entered as a purchase on November 2. So it should have been recorded as a purchase on October 29. So purchase were understated for the year ended October 31, but that is not the question. The question is whether the item has been counted as of October 31. Sabi, the receiving report indicates that the goods were received on October 29, and therefore, if the count was conducted in the last statement, inventory was determined by physical count on October 31 as 77,500. So the physical count was conducted on October 31. So being that, that means therefore, because the goods were received October 29, then these were properly counted. So inventory is correct. It is only the purchase that must be recorded in October instead of November. Then an invoice for 3,150 terms FOB shipping point was received October 15 but never entered. Attached to it is a receiving report indicating that the goods were received October 18. Across the face on the receiving report is the following notation: merchandise not of the same quality as ordered. Return for credit October 19. So it was not entered. So it was returned for credit on October 19. Therefore, when the count was conducted on October 31, it was not counted. So the inventory is correct. Number 4, an invoice for 3,600 terms FOB shipping point was received and entered October 27. The receiving report attached to the invoice indicates that the shipment was received October 27 in satisfactory condition. So this is purchase FOB shipping point, and the count was conducted October 31, and the goods were received on October 27. That means, therefore, that they were properly counted. No adjustment is necessary for this item, even for recorded purchases. Number 5, an invoice for 4,800 terms FOB destination was received and entered October 28. The receiving report indicates that the merchandise was received November 2. So if it was received November 2, that means it was not counted. The goods were shipped FOB destination. So that means we do not have legal title yet as of October 31, although the purchase was entered early on October 28. So it was the purchase, again, that was overstated, but the goods were not counted as they were received only on November 2. So the inventory was determined through physical count, not through the records for purchases, because under the periodic inventory system, that is done independently. And therefore, our inventory is just 77,500 plus 6,000. So that is 83,500. So it's letter B. Then MC30, what is the cost of inventory to be shown in the statement of financial position of Elegance as of December 31, 2022? The Elegance Manufacturing Company. So inventory lang din po. In its statement of financial position as of December 31, 2022, has an inventory of 1,760,000, which consists of, so the total composition is given. I'm just validating. Okay, so 1,760 is actually the total of all the items listed here. You may verify. So this one which consists of. So if the total item is listed and you verified that this is the total composition of 1,760,000, then you may choose only those items that must be included in inventory. If, on the other hand, 1,760,000 is taken from the inventory list and given are questionable items, then you have to make adjustments only for the items that may or may not be included. So the adjustments. But here, 1,760,000 is comprised of all these items. So we may select only those items that must be properly included. We have direct materials 550, that is inventory. We have direct materials purchases in transit, FOB destination. We do not have legal title yet, and therefore not ours yet. We have direct materials purchases in transit, FOB shipping point. We have legal control and economic control. So we have 90,000. Prepaid insurance on inventory. That is another item. So that's prepaid insurance, not inventory. We have work in process of 380, finished goods of 450. We have goods shipped on consignment at selling price. So this is shipped on consignment at selling price with 20% profit on sales. And therefore, this must be reduced to cost. We are to add 450. Therefore, the cost is 150,000. Please take note that the gross profit is based on sales. So therefore, to compute for the cost, you multiply 150 by 80%. So that must be 120. So what must be added is 120. So it is 550 plus 90 plus 380 plus 450 plus 120. So it is 1,590,000. Total is 1,590,000. Okay, so MC31. The inventory account of Nike Trading at December 31, 2022 included the following items. The question: based on the above information, the inventory account at December 31 should be reduced by. Okay, so we have net reduction, net deduction from inventory. That's the question. Goods purchased in transit, FOB shipping point. That's correctly included. We have merchandise out on consignment at sales price 104, including markup on cost, and therefore 104 divided by 130% because that is on cost. 130,000 divided by 1.3, that is 100. Therefore, what must be, although these are ours, they must be included only at cost, but 104 minus 100, we need to reduce the inventory by 4,000. Goods held on consignment, it's not ours. Therefore, we need to reduce inventory by 56,000. Goods out on approval at sales price. Cost is 25,000. So 32,500 out on approval. So the customer has not signified yet that these goods have been sold already. So these are ours. But if there is no sale yet, it must be stated at cost. Therefore, we have 7,500 difference. So we have 4,000 plus 56,000 plus 7,500. So we have 67,500. Am I correct? Let us go back. So we have goods purchased in transit because there is no item here. So 4 plus 56 goods out on approval at sales price 32,500 minus 25 plus 7,500. So that is 67,500. May I go back? That is correct. That's 67,500, and therefore this must be 67,500. Let me check again. So goods purchased in transit, FOB shipping point, it's correctly stated, correctly included. Merchandise out on consignment at sales price, including markup of 30% of cost. So that's 104 divided by 1.3. No, that's 80,000 pala. Sorry for that. So it's 80. So buti ring nagkakamali para later you know how to correct. Okay, so therefore 104 divided by 130%, it's 80,000. Again, it's 80,000. Therefore 104 minus 80. That means therefore that the deduction here must be 24. Okay, so I think that's it now. 24 plus 56,000 plus 7,500. So your deduction from inventory must be 87,500. So this must be 87,500.